I'm going to be a tax preparer seasonal for H&R Block, so I'm working on that. I'm working on my doing my chapters little by little, then taking my
Do you
test.
get a
So
C-Tech license?
no, no,
No?
no, not in Charleston anyway. But I'll be, I used to work with them years ago, and I decided to go back, seasonal, and
All right.
as y'all talk about taxes, I guess I'm gonna use it. That'll be another lead generator for me that I wasn't even thinking about. So yeah.
Yeah.
So I'll keep y'all posted about the cash method and accruals, but I think you're about right, Tanya, because I do see tax returns like that. Yeah.
Yeah. Yeah, and I can tell you that if you have, let's say a client or a prospective client gives you tax returns that say they're doing, you know, 1.2 million in revenue. And then they give you a P&L and it says 1.210 million because one's on a cash base and one's on accrual. It's like, who cares? I mean, that's close enough where you can still use that P&L to look for additional add backs and certain things. But ultimately, you can also just tell the client, hey, I'm thank you for sending me this on an accrual basis. Can you go back into QuickBooks, run it on a cash basis, and resend it because I want to make sure the number's tight. And even then, they're still not going to be exact a lot of times because a lot of times CPAs will make your depreciation adjustments and things like that they didn't, that the seller didn't have in the books. And sometimes the sellers won't add them in. The CPA will give them a journal entry they're supposed to make, and sometimes they don't make those. So there can be things that are off a little bit. But what you don't want is you don't want to do a recast from a P&L that shows 1.2 million and then get a tax return that shows 600,000 in revenue. Because that is, then your recast goes out the window, right? If you didn't have 1.2 million to start with in revenue and all you had was 600,000, then whatever profit you came up with is probably gone. Whatever SDE you came up with probably is not there because you can't
So let
add
me
back
ask you
what you didn't
this.
subtract out.
Let me ask you about the balance sheet then. How does the balance sheet tie in?
Yeah.
Because you go to the bank and you take the balance sheet into the bank for a loan.
Yeah.
And how does that tie in for you? I mean, to me, that's very important because it gives me a snapshot of a moment in time, and I can see how they're doing. Really, I can see if they're paying their bills. I can see if they've got, I can see a lot on a balance sheet if you know how to read a balance sheet.
Yeah. Yeah. I mean, I look at the balance sheets, but what I found over the years is that oftentimes the balance sheets don't make any sense. Like, instead of booking things as,
They're not accurate, is what you're saying.
yeah, they're not accurate. I mean, they might show accounts receivable
Mm.
as negative 280,000. It's like, well, your
So you've
AR
just
should
kind
never
of
be
thrown those
negative.
over
How
on
did
the
that
shelf.
happen?
I would assume, Tanya, maybe I'm wrong, but I would assume a more sophisticated company, depending on the company itself, but you have to have a good balance sheet. The balance sheet to me is like that's the health. That's the you look at that and that tells you the health of your company. The P&L is a snapshot of revenue, but and maybe some expenses, but not the health of your company.
Yeah. No, you're right. I mean, P&L is your revenue and expenses, and the balance sheet is supposed to be your
My
assets,
gosh.
liabilities, and equity. So, what I look at on the balance sheet, I do look at a balance sheet. I want to look at what outstanding loans are. And one thing that's really interesting to me is if you see a shareholder loan out there and so you've got a seller who's telling you how great the business is doing and how strong it is and how the cash, there's more cash in the bank than there's ever been and all that. And then you look at the balance sheet and the shareholder loan over the last 3 years has gone from 100,000 up to 400,000. It's like Okay, well, the owner's put money in to float the business. It's very clearly because that shareholder loan wouldn't be going up otherwise. So,
Right. That's a
you know,
that's a
it's
very important point. Yeah.
yeah, I mean, so there are things like that that you can uncover on the balance sheet that um will tell you a different story than the one that you're getting from the seller, and you can't necessarily challenge them directly, but you can ask questions. You just say, "Oh, well, I noticed that, I noticed that you have some long-term debt. Um, is this debt going to be paid off? If they have notes payable and stuff like that, it's going to be paid off. Also,
Morning.
they should have, if they have an EIDL loan, it should be on the balance sheet. Sometimes they're not. I mean, there's a lot of people that don't put those on their balance sheet. So you can look at the balance sheet, you
Hi,
don't see
Claudia.
that out there,
How are
and then
you?
you get to
Yeah, I'm
closing
here for Chris.
and you
Good
can't
morning. Good
close.
morning. How are you? Yep, yep.
We can hear you, John.
It's Leah and Blanca. I called.
I just muted him.
Oh, okay.
Anyhow,
Tanya, Tanya, can we rely on the inventory on the balance sheet of the income tax because they don't give it to me, the balance sheet? Are you?
yeah, I mean, when you can't, so if I don't have a balance sheet, because sometimes you don't. I mean, they'll send you the P&Ls, but they don't send you the balance sheet. You can always go to I usually go to the tax return and look at
Yeah.
the Schedule L
Yeah.
because that's the equivalent of a balance sheet. And, I'll take a look and see what that says. Bye, John. But it's not always accurate. I mean, I've had manufacturing companies that their balance sheet and their tax returns show $750,000 in inventory, and you look at their warehouse and they've got 5.5 million,
Oh.
and it's ridiculous. And it's like nobody is going to buy your inventory. You nobody is going to want to float that much money, and no lender is going to provide a loan for that level of inventory based on those balance sheets and all of that. So the inventory that's on the balance sheet is not always accurate. Um,
A lot of
when
them are
there's excess
plugged. They plug
inventory,
them from year to year to year. It's
yeah,
a floating number. They're too lazy to go out and do an actual,
inventory
uh,
count.
inventory count.
Yeah.
Yeah, it's pointless most of the time.
Yeah. I mean, yeah, if it stays the same
Yeah,
year after year after year, there's no
but
changing
you
it.
do look for depreciation. Depreciation is quite important.
Mhm.
And those numbers have to match the depreciation numbers because that's part of your tax calculation. The depreciation is.
Yeah, but
So
your depreciation, you're not using the accumulated depreciation off the balance sheet. You're using the
no, but you're
depreciation off of the
no,
expenses.
no. That's right. That's right. You're the only depreciation number that, but they do have bearing on each other at least.
Yeah. Yeah.